We have among us CA Sunil Gabhawalla sir, who was actively involved in the policy formulation process of GST and keenly follows further developments too. Sir's YouTube channel contains various videos on this topic and has garnered more than 60,000 views. His firm SB Gabhawalla and Company has been ranked as one of the top 10 GST consultants for the year 2018 and 19 by the Insights Success magazine.
Sir's expertise promises to shed light on strategies, best practices and practical wisdom that will empower us all in facing the complex landscape of GST litigations. Ladies and gentlemen, without further ado, I invite C. Sunil Gabhawalla sir to share the valuable insights and illuminate our path in navigating the challenging waters of GST litigation. Please join me in giving a warm welcome to our distinguished speaker.
Sure. A very good afternoon to all of you.
Good afternoon.
A pleasure to be at this holy place of Shegaon, and when I was invited to speak at Shegaon, I think it didn't take me a moment to hesitate because I was longing to be for the darshan of Gajanan Maharaj, and therefore I didn't even battle an eyelid to say that yes, I would be more than happy to be a part of this August gathering where I can share some of my thoughts on how to handle department litigations and GST interactions. Now, essentially, how does this topic come into place and what are we planning to talk about today? My original schedule was from 11 to 1. I think we are already at 12:40. The organizers have told me to cover it in maybe around 75 minutes of time. So I'll try to do justice in that time. We'll try to, some of the things are repetitive, so we'll try to do it as fast as possible over there. And then we'll have some time for question answers. So for topics which are skipped up, we can cover it over there. But the idea of today's session, I think, comes from, we have to go back to 2017, when there was a lot of discussion about GST. The euphoria like what we have about Chandrayaan just a couple of days back. Some similar euphoria was there. The parliament opened at the midnight for the first time at that time to announce the rollout of GST. At that time, I think various names were given to this acronym of GST. And I think two diametrically opposite names were being canvassed. Without going into political aspect of it, there was a discussion that GST stands for a good and a simple tax. And there was an equally diametrically opposite view that GST stands for Gabbar Singh tax. What does GST actually stand for? And if we have to look at it 6 years down the line, because this is what we talked about in 2017. And if you have to look at it 6 years down the line, and if someone asks me this question, I would say, look, we had at least 14 to 15 tax rates. Today, except a few products wherein there is an exemption of 5%, and there are reasons why you need to do that. Generally, people are not worried. They are saying 18% tax rate. HSN classification important, but generally the tax rate is neutral, 18%. Credits, there is a block credit story, but generally all credits are free flowing. And therefore, if you ask the industry, most of them would tilt towards saying it's a good and a simple tax. But if I'm going to ask this question to you and ask for a show of hands, I'm a little bit worried. Because as professionals, the one thing which will really determine whether the GST is a good and a simple tax or a Gabbar Singh tax is the manner in which the tax is administered. A bad tax administered in a humane manner will always score way above a good tax administered badly. And I think towards the end of the session, I will do a show of hands from each of you and would want your feedback on which of these two sentences really works for the GST law as a whole. And I think in that sense, this session becomes very important. And we'll see lots of examples as we go through. And I'm sure many of you have experienced, because today I believe most of us either directly or indirectly is practicing into GST in some manner. Either directly, actively involved in GST practice, or maybe as a statutory auditor or as a tax auditor, there is an exposure or an indirect interest into GST. So I'm not going to ask how many of you are into GST. I'm assuming that everyone here knows the fundamentals of GST. It's already 6 years into the game, and we have perhaps experienced some of the pains and some of the joys of GST also. So with that little bit of a background, we go into what we are planning to talk about today. And what I try to do is this slide, we will spend some time and anchor on this slide, which typically tries to cover the entire theme of the session. And it covers the entire gamut of department interactions. And typically whenever you look at a department interaction, I think the first and the starting point of any tax is self-assessment and self-compliance. And here I think the 3 steps we are very much aware about. The first step is the transactional compliance, which comes by way of your e-way bills. If you are a product company, if you are a service company, e-invoicing. Of course, e-invoicing is now mandatory for goods also, and the limits for e-invoicing have been reduced. So today you have a scenario that any taxpayer having a turnover above 5 crores in any of the previous years is required to mandatorily issue an e-invoice. Friends, I used to say this in 2017 and I keep on saying it in 2023. That GST is not just VAT plus excise plus service tax. It's just a macro law level thing, but the ground level implementation, the extent of digitization which GST has created is mind-boggling, and it has many ramifications for everyone. And I think this is where I think it's important that the first basket which we are going to talk about for a few minutes needs to be borne in mind. It has nothing to do with department interactions, but this is the fodder for department interactions. Essentially, your e-way bill done incorrectly will result into an ASMT 10. And many of you who are into practice would have seen lots of ASMT 10s in the last 1 year coming up. Scrutiny notices, right? We'll talk about it in a few minutes. What is the germination of ASMT 10? And if you look at the reasons, most of the times your clients would be right. It's not that you are not paid the tax. But what would be the reasons? There will be some notice which will say that there is some figure in your GSTR1, there is some figure in an e-way bill, and because they are not reconciling, they will issue you an ASMT 10. So naturally, either your e-way bill is an error or your GSTR1 is an error. Maybe it's a small error, procedural error, representation or a disclosure error. But if you really go down to the roots of your ASMT 10, the first interaction point with the department, you will find that most of the root causes will lie in your first column. And therefore, if the first column is done perfectly and understanding the data flow, maybe the extent of ASMT 10, the extent of DRC 1s, of course some things can be unavoidable, but to a large extent, you may be able to reduce the volume of those types of errors or random notices coming to you. So that is where I think transactional compliance is. Whenever you do a transaction, there is an intelligence on the GST portal by way of an e-invoice being created. Many of us as consultants do understand this, but the industry is still a little bit behind in understanding the deep ramifications of this real-time information being available to the government. And I think this is something which as consultants we will have to step into our advisory role and advise our clients that look, it's no longer the way you did business 10 years ago. Today, if you are generating a fake invoice, within maybe a month, the department will come to know. And it will create a problem. You are just shortcutting the process, and those shortcuts are never going to work. I think that education, that is one important role which we as professionals will have to now take. We have to get reconciled with this fact that this is the new way of implementing a tax. And the earlier we reconcile with that, earlier we will be able to educate our clients, and they would also be able to reconcile slowly and steadily to that thought process. So I think that's where this self-assessment and compliance becomes important. At the end of the month, there's the GSTR1. We are all aware B2B nowadays gets auto-populated, especially in the IRM cases. And thereafter you have to put in the B2C data, and accordingly your GSTR1 gets generated. And thereafter you have GSTR3B, which is your monthly return. And where necessarily you put in all your credit details after reconciliation. And thereafter you will also have your RCM, and the tax payments and the offsets happening in your monthly return. So this is your day-to-day compliances which your teams would keep on doing, and maybe to a large extent they would say that we are always busy in this entire process and life just revolves around 11th and 20th. But well, that's one major chunk of activity which does present itself. And as again, at the risk of repetition, I would just like to conclude this part by saying that the quality of this compliance will determine the volume of the subsequent bullets which we are going to talk about. So with that basic starting point, we now go into the second and the third baskets. And this is where I was just talking some time back, and what I realize is people who have come into the GST practice either from a VAT background or from an income tax background, they find a little bit of a disconnect in how the GST law proceeds as far as the entire assessments and the procedure is concerned. Now, one fundamental thing which comes in GST from excise and service tax background is this concept of adjudication. Now, the concept of adjudication, friends, as we all know, is very, very different from the concept of assessment. When you look at an income tax, typically you file a return, you get a 143(1) intimation wherein apparent errors are coming out and you are asked to pay tax or you get a refund processed, and within a particular time frame you get a notice under 143(2), which basically means your case is selected for scrutiny. And once a case is selected for scrutiny, it is selected for a particular assessment year. This assessment year concept is a very important concept under the income tax law. Then naturally there will be meetings, there will be faceless compliances, hearings and all those things, submission of data. At some point of time, there will be an order, an assessment order, comprehensively covering the return which you have filed and redetermining what should be the correct income to be offered and the correct tax to be paid. Friends, this is I would believe this is a very, very structured approach towards assessment. And once that assessment order is done, then there could be extraneous situations where there could be either a revision or a reopening of assessment under 148. But typically, to a large extent, one would say that the particular assessment year has been conclusively or comprehensively covered by that assessment order. That's subject to the exceptions of reassessment, revision, rectification, etc. GST doesn't work on the concept of assessment. It works on an adjudication of an issue. Now, this is a fundamental difference which some of us do understand, but especially for people who are from income tax and VAT background, we need to understand this. So, typically in GST, what happens is there will be an identification of an issue. There is no assessment year concept. So, an issue can be picked up for a particular year. It can be picked up for a group of years also. And typically, so for example, if today somebody finds an issue, like saying 2A versus 3B mismatch, which is a very commonplace issue, they could issue you notices for each year separately, or they would be within their rights to issue a combined notice for maybe 2017 to 2022, 5 years or 4 years, block of years also. There could be a common notice only on one issue. And maybe 3 months down the line, if they find some another issue, despite having issued a notice for one issue, they can go ahead and issue another notice. For example, retrospective cancellation of vendors could be another notice which you could get. A reconciliation between your GSTR 3B and 9 could be a third notice. And in the meantime, if in the industry there is some dispute about the tax rate, that could be a fourth notice. And you could have 4 or 5 parallel notices, and unluckily, sometimes they are from different authorities. And that starts the entire complication. And this is where I believe that GST is very, very different. The way you approach a litigation in GST is going to be very, very different from the way you approach it under the income tax or the erstwhile VAT regimes. So, therefore, when you are saying identification of issue and adjudication, and therefore when you look at the law also tries to provide provisions which deal with either identification of the issue or adjudication of the issue. And therefore we have 2 compartments in this slide also, which we say one is pre-adjudication. So because the owners, unlike 143(2), which just says you are called upon to present all your books of accounts and return of income, support your return of income, and then randomly officer can keep on asking you any questions. Unlike that, here the show cause notice, which is the pillar, will have to identify an issue. How does the officer know about an issue? So there are various means through which the officer can frame an issue or identify an issue. They are known as pre-adjudication procedures. Once the issue is identified, it's not only important for the issue to be identified, it is also important for the issue to be quantified, meaning the stake involved, the tax involved in that issue also has to be mentioned and determined. All of that happens in the pre-adjudication process. Once the show cause is issued, the allegations, the issue and the amount is frozen. The adjudication cannot go beyond that amount. Now that is one important fundamental principle which we are seeing many a times, especially the state tax officers are missing out. They might have issued a notice for, let's say, 10 lakhs, and at the time of adjudication they might confirm a demand of 11 lakhs, which is fundamentally incorrect. If the show cause notice is for 10 lakhs, it brings in an outer limit of the demand which can be created. That is a settled proposition as far as the process of adjudication is concerned, and therefore the two steps have to be looked very distinctly, and as consultants our approach to both the steps would also have to be very distinct. So the first step is the pre-adjudication step, and in the pre-adjudication step, as I was highlighting, through various different mechanisms, the officer fishes into some data. He is doing a basic fishing, he is expected to do fishing and find out an issue and quantify an issue. So what are the means through which he does? So we have 4 or 5 means to do that. And I think the first one which is very commonplace, is scrutiny of returns. There is a provision and we'll go into each of them in a few minutes. The concept of scrutiny of returns is something like a 143(1). There could be a return GSTR1, GSTR3B filed by you, and based on those returns, if there are some internal inconsistencies on those returns, then ASMT 10 can be issued to you. What is the scope of that? We have a couple of decisions and a circular will go into that. But broadly what happens in scrutiny of returns is it's a back-end job. They would just compare your returns filed by you and the compliances and the data available with them. And based on that, they will find out whether there is some inconsistency, there is some non-payment of tax or something like that. And then they will ask for clarifications through an ASMT 10, and you are expected to reply. And based on that, if this is satisfied, the assessment gets dropped. If he is not satisfied, it will lead to a DRC 1A or DRC 1, which is a show cause stage. All these roads in the second column which we are looking at, all the roads will ultimately merge either into a dropping of the issue or framing of an issue and issuance of a show cause notice. And therefore, we always say show cause notice is the pivot, which we will talk about in the third phase. Thereafter, there is an assessment of non-filers, base judgment assessment happening for non-filers. If you are an unregistered person, then it could be a provisional assessment. So there are some specific provisions relating to that. Again, this can get nullified if you are immediately complying with the data. Department audit is one process which came from the excise and the service tax regime. Again, the state tax authorities many times do not appreciate this depth or the objective of department audit. But yes, there is a process of ADT 1 issue whereby the department, so the first scrutiny which we talked about was about the returns. Now when you go to the department audit, the objective is financials with the returns. So therefore, they will look at your financials, they will look at your records, documents and compare it with the returns which you have filed, and if they find any gaps between your financial and audit data and your returns data, that is something which is ideally the scope of the department audit. But what if somebody just takes things outside the books? We are all aware of the Indian jugaad. A restaurant will just not issue invoices. If it's not issuing invoices, it's not going to come in financials, it's not going to come in your returns. Your financials and returns are matched, but there is actually much more turnover which is unaccounted turnover. To identify those types of situations, we have a bit of an intrusive mechanism. Every law has it, GST also has it, which is the inspection, search and seizure. And finally, when you are moving goods, you are expected to have a e-way bill along with movement. At the field level, there could be an interception, and that is also one manner in which they try to find out unaccounted sales. And an e-way bill interception again could be one type of a mechanism through which they could find out whether there is any what you can say error in discharging taxes. But certain times what happens is the issue is an industry-wide issue. Recently we had something known as corporate guarantee given by a holding company to a subsidiary. Now they know this is an industry issue. So for these types of industry issues, many a times what happens is the department will issue you a summons. They know that there could be a possibility of this issue in these types of industries or this type of companies. So they would issue notices to all of them, summons to all of them, and then record a statement, take information, and through that again they can build up an issue. So these are different mechanisms through which an issue is identified, an amount is identified, and then a show cause notice is issued. And that takes us to the next step, which is the adjudication and appellate procedures. Now when you are looking at adjudication, the process has 2 or 3 important steps. The first one being the show cause notice. Of course, the law also talks about a pre-show cause notice in form DRC 1A, and thereafter a consultation and a show cause notice being issued. Of course, there is thereafter an amendment in the rule saying that the word shall be replaced by may, and therefore there are interpretations to say a pre-show cause notice is not mandatory, but show cause definitely is mandatory. And as I was highlighting, the show cause notice, the depth of the show cause notice is something which is very important. If you look at, and we've seen many show cause notices from the state tax department, I can tell you 90% of those show cause notices can be quashed as null and void ab initio. Because the Supreme Court in Brindavan Beverages has held very clearly that these are the prerequisites of a show cause. And if you look at the state tax notices, none of those prerequisites are satisfied. The first and the most important thing is that a show cause notice has to frame an issue and has to be specific. Now what do we understand by this specific? I am sure many of you have faced 2A, 3B notices. How many of us have faced it? Most of you. So how does that 2A, 3B notice come? They pick up the figure from 2A, they pick up the figure of ITC from 3B and say that if 2A is less than 3B, they straight away say that this is the proposed demand. It starts with ASMT and slowly and steadily it graduates to DRC 1. In most of the cases, if there are some timing adjustments and you have replied accordingly, they might give you that concession and all those things. But ultimately when DRC 1 comes, DRC 1, which is the show cause, would also somewhere, subject to these adjustments, still talk about an aggregate ITC claimed in 3B versus the adjusted 2A figure. Maybe both of them there will be some adjustments, reversals, current year's credit taken in the next year's credit appearing in the next year's 2A, all those other parameters and all those things we are aware of. But end of the day, there would still be a small table in DRC1 saying that look, you have claimed a credit of let's say 50 lakhs. Your adjusted 2A shows 40 lakhs. Therefore, the balance 10 lakhs is, please show cause why it should not be demanded from you. Is this a specific notice? Because Brindavan Beverages says that you have to identify the issue and a specific point. I have not seen a single notice where there is a transaction level detail of this 10 lakhs. Has anyone seen it? So, the notice does not put you to cause that you have wrongly claimed a credit of a particular airline, which you claimed through invoice number ABC. That is a specific type of a notice which is expected under the GST law.
But you don't have the data only for...
Many times you have given data. Many a times you have given data through ASMT 10 replies.
You know, like which parties ITC have claimed they don't have the data to identify.
No. So typically DRC1 is a third stage. Before that you have an ASMT 10 and you have 1A. Assuming the taxpayer has done his due homework, in ASMT 10 one would recommend that you will give a reconciliation along with the purchase register and the 2A as per your version. despite doing all of that, we are not seeing that specificity coming in the show cause. If you have not done your homework, naturally he has no option but to do this. Or he might have issued you, ideally he should have issued you a summons and asked for that purchase register from you and then done that homework. When it comes to the audit, I'll highlight what the audit manual also talks about. So what here I am trying to bring about is the department is expected to do a full-fledged homework before they issue a show cause notice, because the show cause notice has to identify an issue. It has to identify a specific transaction or a set of transactions and accordingly levy allegations. So in that sense, if one looks at a criminal law one would say that a charge sheet is an important document where there will be a framing of a charge. Let us say there is a charge saying that Mr. X has framed for some murder. Can the charge sheet say that, look, I think Mr. X must have murdered someone? They have to say Mr. X murdered Y. These were the circumstances which make me believe that he has murdered Y. And these are the evidences on which I believe that. He can't just say that, look, I see Mr. Y dead and I see Mr. X as his neighbor, therefore I assume X has murdered Y. Now the onus is on X to prove that he has not murdered Y. Comparatively, they have 2A, 3B notice. What are they doing? 2A shows 50 lakhs, 3B shows 40 lakhs. Therefore, I presume 10 lakhs is incorrectly claimed. Where is that specificity of the charge? That is the aspect which we are trying to bring about, and Brindavan Beverages Supreme Court talks about the requirement of this specificity of charge. Especially when the taxpayer has gone way out in the earlier pre-adjudication processes and submitted the factual matrix correctly. And I think that is very important to understand that show cause notices, the way they are drafted, bring out the specific issues therein, and please identify those issues and revert with your responses in that manner. So after show cause notice, of course, we are aware there is a personal hearing, and then there is an adjudication order, and ultimately then, of course, if you are not happy with it, then you end up with a appellate procedure. First appellate remedy, you have to pay a pre-deposit of 10%. Thereafter, you go to a second appellate authority, which is still to be constituted, the GST Appellate Tribunal. Of course, you pay 20% extra and then keep the file pending. And whenever the appellate tribunal gets constituted, you can then file the appeal at that time. So that is how it primarily works. And thereafter, you have your appeals to the High Court and the Supreme Court. Thereafter, you have the fourth process. Please understand, first and the second process, there is no defined demand. The third process, the show cause, is a proposition of a demand. It is still not a demand. See, if I am an accountant, I am not required to treat a show cause notice as a liability. It is not a liability. It is just an allegation. An order in original creates a recoverable liability. And post the order in original, if you are disputing it, necessarily, if you are in the appeal process, you have paid the pre-deposit, then the balance amount is automatically stayed. But if at any point, let's say there is an adjudication order, you do not pay that tax and you do not even file an appeal, then the demand becomes due because there is no stay and your time limits for appeal might have exhausted. So in that case, the department can start recovery, and that is the last step. Recovery can happen through various mechanisms. They can go to your debtor, they can go to your bank account, and they can take your property attachment, all those things. Two specific provisions which have been brought about. One is, of course, bank attachment, which is used and misused many times. And another is blocking of electronic credit balance. So that is a specific provision which has been brought in the GST law, which says that if you have an accumulated ITC in your electronic credit ledger, then in certain circumstances, the commissioner can block the utilization of that ITC and keep it as an attached item. So only important point which we are seeing many a times here is that recovery would presume the existence of a valid demand. And we are seeing many cases where department, while it's on the first or the second, first of course is your side, while the department is on the second side, they would force you to pay. Now this is where the distinction between the good and a simple tax versus a governing tax will come in. And when we go to especially the search and seizure types of provisions, we'll see what the government wants to say and what the implementers want to do. And you'll see a big change between both the processes. What the CBC wants to say through its instructions and circulars and what happens when you actually face that type of a situation is very different. And therefore, that is something which results in this issue of how do we deal with this entire process. And of course, the unsavory thing is nowadays they want to flash a lot of situations wherein they come into the news by saying that we've arrested this person, especially when we look at sensitive things like fake invoicing and all. We find that type of a situation also happening at various points of time. So this, I think, is what we'll be trying to cover. It was just a very quick bird's eye view of what ideally is the scope. A couple of points before we go into the specifics of scrutiny and other aspects is, as a consultant, we need to understand our approaches, especially between the second and the third columns. Fourth column, of course, is a very specific type of a rare type of a situation where you'll face a bank attachment and things like that. Those are emergency provisions. You'll have to deal with it as and when it comes. And there cannot be a specific strategy for the fourth column. But when you look at the second and the third column, what I am also seeing is, in many cases, at the pre-adjudication stage, there is a lot of emphasis by the consultants on legal submissions. And I think that is important to understand and thrash out at this point. The difference between the second column and the third column is, the second column, the officer is fishing the facts and trying to frame an issue. At that stage, until the officer has framed an issue, we don't need to give a 20-page response on the law. What is important is, we should bring out all the correct facts, because correct facts at this stage would mean that he cannot fish in a different manner. So for example, that question which came up, the officer didn't have data at the show cause stage. If the ITC register with a date column of 2A reflection is given, the officer cannot say I didn't have data. Rather than writing 10 judgments at that point of time, because many a times we'll write 10 judgments, we'll say buyer cannot be prejudiced for the default of the seller. All of that, the focus of the reply should not be that. Maybe you might put it as one of the points, but the focus in the second column should be on your correct facts. And many a times I see that correct facts coming out over there is missing, and there's a lot of unnecessary emphasis on the law. There are two problems. Firstly, the facts gets diluted, which is the pillar on which the entire litigation will get built up. And secondly, when you are giving out too much of law, in the show cause he will counter each of the law which you have said. And therefore there's nothing which you have to add at that point of time. So from both those perspectives, I believe that a difference in the approach in drafting in submissions will have to be done between the second stage and the third stage. Now with that background, we go into the first interesting facet, which is ASMT 10. And we are aware section 61 talks about ASMT 10. We are all aware of the fundamentals that a section prevails over a rule, and anything which has to be done has to be authorized by a section. Now in that background, let's see what these provisions relating to scrutiny of returns talks about. What is the scope of scrutiny? It says the proper officer may scrutinize the return and related particulars furnished by the registered person. So what is he expected to scrutinize? Two important facets. Please understand this. The return. The return is basically your GSTR 3B. At the most, one will say an annual return, 99C is a return. And related particulars furnished by the registered person. Now my question to you is GSTR 2A furnished by the registered person? How is GSTR 2A coming? my suppliers, not me, the scrutiny is about me. My suppliers furnish GSTR1 and that GSTR1 gets auto-populated into GSTR2A, and this is supplied to me by the GSTN portal. It is not furnished by me to anybody. And today, practically all ASMT, I mean 50% ASMT 10 notices deal with this 2A 3B mismatch. There's a CBC circular which says that 2A 3B mismatches will be dealt by, could be one of the parameters of scrutiny. But if you read the section is very narrow. It only talks about self-sufficiency, like 143.1. It talks about, okay, you have claimed a deduction which is apparently not available. That is something which will be a part of a prima facie adjustment. Something which requires interpretation, something which requires elaborate working, cannot be a part of a prima facie adjustment. Same, it will have to be a part of the normal process of 143.2. Same way here, it cannot be a part of ASMT 10. If at all, it will be a part of ADT 1 because there is a elaborate powers available to that person, or it will have to be through the summons route. Now, this is where many a times there is something which is legal and something which is practical. Moment empowered by the knowledge which I am giving you, tomorrow you get one ASMT 10 notice of 2A 3B and you tell the officer that look, you can't initiate 2A 3B through ASMT 10. He will say, okay, I am your proper officer, I will issue you a summon under section 70 and ask for this information. And then I will go to the DRC 1. So therefore, practically, this is a point which we need to bear in mind. Maybe developed at some point of time that there is a limited scope available for scrutiny. But so long as there is information available, it may make sense to cooperate. We have seen cases where ASMT 10 might raise a proposed demand of let's say 50 lakhs, but based on submissions, reconciliations and other things submitted, maybe the DRC 1A comes only for 5-7 lakhs. It at least helps in reducing the demand and the possible risks ahead in terms of the litigation and the demand. So therefore, while this point is a very valid point that what is the scope, the scope is only prima facie things between the return and related particulars. Practically, it may make sense unless you are caught against a wall, you are really on the taxpayer is really on the wrong side of the thing, and you find that there's really no other hope left, then maybe you can raise this technical point. Otherwise, it's avoidable to raise such a technical point. So what we are told is basically there will be an ASMT 10 issued, and for that there is a CBC instruction which talks about various things. As I said, many of these things are not apparent in the return, and one could really debate whether many of these things can really be a part of ASMT 10. Of course, 1 versus 3B clearly yes, it's a part of ASMT 10. The second one, RCM comparison between RCM discharged versus RCM credit taken, all of that is perfectly fine. 3B value versus TDS, TCS can be a prima facie query, there's no problem on that. But some of the other things, as I told you, 2A, 3B, ITC of vendors whose registration got retrospectively cancelled. We are aware of these issues. Now, according to me, this cannot be a part of an ASMT 10 process because it's not a related particular furnished by me in any manner. So yes, so some of these issues would become a part of ASMT 10 process, some may not, and one will have to be conscious and just putting the seed in your mind that this is an argument which is possible. Of course, on something similar lines, there were cases, and I think a couple of them are important to understand. One of them, the issue was relating to classification of that and the applicable tax rate. And the taxpayer had paid a particular tax rate, and the officer said, no, according to me, the tax rate should be different, and therefore through the ASMT 10 process, there was an attempt towards reclassification, and that's where the High Court clearly says that no, issues of interpretation. I might be interpreting something to be eligible for a 5%, you are interpreting something to be 18%. This is something which will have to go through a normal show cause process. It cannot be a prima facie type of an adjustment, a subject matter of ASMT 10. So that Madras High Court decision is very important in this situation type of a case. That takes me to the second part of it, assessments. In case of non-filers, there is a provision which says that if you have not filed returns, then the officer can, to his best of his judgment, pass an assessment order, ex parte order, and then you are given a timeline of 60 days to file the return. If you file the return within 60 days, then that assessment order is null and void to start with, and it is withdrawn. So of course this is something which came from the VAT regime, where you had a concept of a best judgment assessment and withdrawal of that best judgment assessment order. And accordingly, these types of provisions for assessment for non-filers are available in the GST law also. Of course, fundamental question which happens in many times is there is not a valid service of notice and straight away an order comes. And in that case, the question is whether an order can be issued without a notice, and the answer is clearly no. You have to issue a notice and thereafter there will be an order. The base judgment assessment talks about assessment of tax and interest. There is no provision for penalty. Penalty will have to be imposed under section 73 through the DRC1 process. It cannot be through the base judgment assessment process. And then we are told that okay, if you file the return, it's automatically cancelled within the time frame. Now of course, we always want some delays, and we always feel we are excused or entitled for delays. And therefore, this is a common problem which comes here also. And we have a decision wherein it has been clearly held that if the time frame for cancellation of order is over and you file a return thereafter, the assessment order cannot be cancelled. It cannot be recalled in that manner. Then you have to go by the normal appellate route only. So the time limit is very hard-coded, and even the officer does not have any discretion for condoning a delay in filing the return after the best judgment assessment has been passed. So that 60 days period is very important to keep in mind in these types of situations. There is a best judgment assessment for unregistered person. Again, a show cause notice has to be done. An interesting situation came up in this case of Orissa, before the Orissa High Court, wherein a best judgment assessment notice for an unregistered person was issued to a person who was factually registered. And they said, okay, but he is registered, but he has not filed his returns. The High Court says, no, if he is registered, the fact that he is registered, the notice and the order cannot be passed under 63. At the most, it will go under 62 or under 73. And therefore, this type of sensitive things, the entire order gets quashed, becomes void ab initio, based on these technical points, and therefore this sensitization to these points may be important for us. So that is as far as assessment is concerned. We talked about primarily the scrutiny, a non-filer assessment and a non-registered person assessment. Now we move to the next part of it, which is the department audit. And this is something which is an important activity which is being carried out. It came from the excise regime. We had EA 2000, a detailed manual, a detailed manner in which the EA 2000 had evolved over a period of time. When it comes to GST, they have created a GST audit manual also on similar lines. Much more detailed GST audit manual, which we'll try to talk about in a couple of slides. And I'm sure every one of us has faced one or the other department audit. The section, the audit manual, talks about things, and when I'm going to talk about it, I'm sure many of you will agree, or is that what I'm talking about doesn't make sense. Because section says there's a timeline for issuance of a final audit report. We don't see an audit report being issued within that timeline. We don't see the audits getting concluded within the defined time frame. There are certain things which the audit manual says the officers will do. But typically they always give you the template and say that you please prepare the data and give us. And of course, as obedient outsourcing persons, we always are ready to take all those obligations and give it. So that's how practically the audit works. But if you look at the provisions and the audit manual, what we are told is the commissioner may, by way of a general or a specific order, undertake audit of any registered person for such period, frequency and manner. So 2 or 3 takeaways from this before ADT 1 starts. There has to be an order defining general or specific entities on which the audit is to be done. When you actually go back to notifications, we find many places there is no specific identification, and that itself could be a ground for quashing an audit process, because the root of an audit process has to come from an executive order from the commissioner. And if you really question it, many a times there may not be that type of an order available that this entity or this class of entities will be audited for this period. Again, the period has to be specified. We are seeing cases where they will start an audit for 17, 18 and 18, 19, and once they start the audit, they'll prolong it to 19, 20. If they want to prolong it to 19, 20, they would need a separate authorization and an order from the commissioner, which in many cases is missing. Now these are some points which we may need to bear in mind. Then we are told that the audit can be conducted either at the department's place or at your place. We all know how it works. They will give you a call, they'll come, they'll want a car to pick them up, they'll want food, all those things we are aware of. I don't need to speak too much about it. We are told the registered person shall be informed by a notice of not less than 15 working days. Now here also we are seeing many a times they just randomly email you that will come in the next week and things like that. But the law provides for a time frame of 15 days. We are expected to give him that whatever data and all those things is required. Then we are told that within 30 days of the final submission of information, the audit report has to be communicated to you. Now this is the time frame which I was talking about. We seldom see this time frame being satisfied. They would take their own sweet time. Many a times the officer will get transferred and the new officer will again want all the data to come to him. But if you look at the provisions, unlike the excise audit which was open-ended, in the GST law, the section brings in a time frame, and therefore it's important at times to keep in mind that there is this time frame which is involved. The GST audit manual thereafter brings out a very detailed analysis of how the audit will be conducted. Now this audit manual, please note, is not for you and me, because we are not going to conduct the audit. The audit manual is an instruction manual for the department officers. And what does it say? It says conduct the audit in 5 steps. We are all aware of these steps. Taxpayer profiling एक annex चला जाता है. आप भर के भेज दो. That annexure has to be filled by the officer. That is what the audit manual says. 3 साल का GSTR 1 का कॉपी दे दो. पोर्टल पे है. Right? And he has an access to your portal. Consolidated 1 दे दो, consolidated 3B दे दो, 1 versus 3B दे दो. I think portal gives that also nowadays. Even mismatches it gives. So whatever is available, ideally it is the work of the department team. Thereafter, once they prepare the taxpayer profiling, thereafter there is a desk review. Prepare a proper audit plan. And based on the audit plan, identify transactions for verification and undertake that verification. काफी बार क्या बोल देंगे, एक काम करो पेन ड्राइव में पूरा टैली बैकअप दे दो. Has anyone faced this type of an issue?
Everybody has.
Yeah. That is not what is expected of an audit. Audit doesn't work that way. They are expected to prepare the basic data, prepare a sample, and then come to your place and look at that sample. That is what an audit is meant. That's how even we do our audit when you do a stat audit or an internal audit. And similar process is expected of the department officer or the department team in this entire process. And based on that entire audit verification, finally reach at an audit conclusion. So these are the 5 steps. This we are aware of. Of course, the basic difference in each of these steps is these are to be done by the officer. Practically everything is done by us. So this is the second step. What is expected in your desk review? Analyze information called in GST M1. Call for documents as required. Again, they have talked about documents like annual report, P&L, etc., which is fine. Testing of income and exemptions claimed. Reconciliation of ITC. Now, go home, refer these paras. It's very interesting what the paras say. Para 5.5.4 and 5.8.3 of the GST audit manual. 2A, 3B. Everyone, it's a pain in the neck. What does this para say? It says the audit team is expected to ask for a purchase register from you. After asking for a purchase register from you, the audit team is expected to reconcile that purchase register with a 2A downloaded by him from the system. And thereafter he has to identify the differences and not stop at that. he has to cross-check with the supplier's tax officer. And thereafter, if he is not satisfied, then make it as an audit para. None of this is being done. And when none of this is being done, the first response in your show cause would be that the audit para, especially if the show cause emanates out of the audit process, the audit para, audit manual obliges the officer to do this, and then link it with DY Bethel, saying that supplier is important, supplier compliances should be checked before coming to the recipient, and then I think it makes an entire comprehensive story in that manner. So finally, of course, audit plan, verification, all of this is the steps. For want of time, we'll not go into that in detail. We go to the next process straight away. Inspection, search and seizure. And this is again one area where you will see lots and lots of challenges at a ground level. And to understand that, I think we'll go again through the sections. The same section, simple one section, section 67 deals with inspection, search as well as seizure. Subsection 1 says where the proper officer, not below the rank of a joint commissioner, has reasons to believe. Now reasons to believe has a lot of history, both from income tax and many other laws. So he has to have a reason to believe that a taxable person has suppressed any transaction relating to supply of goods or services, or has claimed a wrong input tax credit in excess of his entitlement, or indulged in any contraventions. So that is one reason to believe. Or he is a transporter or a warehouse keeper who is storing goods or transporting goods which are counterfeit goods. Basically, these are the situations where if the officer has a reason to believe that these situations exist, he may authorize any other officer to conduct and to inspect the place and thereafter also do the search if required. Now 2 or 3 facets here which we need to bear in mind. The first is the phrase proper officer not below the rank of a joint commissioner. And therefore many a times where the authorization is by a person below a joint commissioner, matters have gone to courts and courts have consistently held that a person below the designation of joint commissioner, if he issues an inspection notice, INS 1, it is null and void and the inspection process has to stop. The department has got wiser, so in the earlier years we had those types of decisions. Today we are finding that they take care to ensure that a joint commissioner does sign an INS 1. So while there are some judgments which are available where we can talk about this, the authority of the joint commissioner, these are all favorable decisions, but as you can see, most of them are of the older period. Nowadays they are sensitized enough to ensure that a joint commissioner signs an INS 1. A common question which comes is, are they required to, when they come, they suddenly barge into your place of business. So what all documents will they come with? So typically they will come with an INS 1 and they are required to show you that INS 1. At the time of disclosure of that INS 1, 2-3 things which you should be careful about is firstly the name. And there's a CBC guidelines also on this and there are judgments also on this, that if the INS 1 is issued in the name of ABC and Company, the inspection, search, seizure cannot be conducted on PQR and Company, even if PQR and Company is operating from the same premises. They would say that okay, they would have some knowledge about one company, and that premises there are 5 group companies. Many times there is an error in the name. They would have assumed some group. They would just say ABC group, but the actual legal names of the entities are very different. Now these are clearly void notices. And there are instructions given that okay, these are the situations, you call your control room, get your joint commissioner, issue a fresh INS 1 and send it. And then start the inspection or the search. Now if those processes are not followed, I think these are the points which need to be raised at that moment itself. There has been a bit of a discussion on this concept of proper officer, especially the Supreme Court decision on canon, which says that the brings in a primacy or single person, though is a singular type of a article. Therefore, there can be only one proper officer. And a little bit of encouragement comes from section 6 of CGST and SGST Acts, which says that if a proceeding has been started by one authority, the second authority will not deal with it. And therefore, there was a bit of litigation on this point that okay, I have been inspected by a state authority and that process is not over. And while that is continuing, can the central authority again come back, some other authority come back and start investigation afresh, asking for data and all those things? And matters have gone to court on that front, specifically because of this definition of proper officer under section 6(2)(b). And therefore the question which comes is whether parallel proceedings under both the laws are permitted or not. Now the only challenge which you see here is where a proper officer has initiated any proceedings on a subject matter. Now the interpretation of this phrase, proceedings on a subject matter, is something which courts have interpreted. And also there has been a little bit of a discussion in the GST Council which talked about cross-empowerment. And in that GST Council minutes, they have said that except investigation and enforcement, everything else is cross-empowered. Meaning, if a show cause is issued by the state, then you will deal with the central tax also, and the central authority will not deal with it. But enforcement and investigation has been specifically excluded in the GST Council minutes. And based on that, courts typically have held that yes, both state as well as central authorities can simultaneously investigate or parallel proceedings are valid. One stray decision from a Calcutta High Court saying that no, if center has started an investigation, state cannot investigate. But that's a minority, one decision. Against that there are 4 or 5 decisions holding that yes, both of them can impede, and you are as a taxpayer expected to cooperate with the investigative authorities. So this we have talked about. Reasons to believe, I am sure in income tax we have had a lot of discussion on reasons to believe. There cannot be any wild reasons or vague reasons. There has to be some specific information. Mere suspicion does not constitute a reason. At the same time, it cannot be a foolproof reason, because if you are sure that this has happened, then it's not a reason to believe at all. You don't need, the officer need not substantiate reasons with a precision, but at the same time it cannot be vague. So that's where the various decisions go into this aspect of understanding what is meant by the phrase reasons to believe. This is an important question. Can a copy of reasons be demanded? And they said no, not at the time of investigation. Thereafter it can be demanded, because at the time of investigation, granting of reasons to believe would be counterproductive, because then it can be a tampering of an evidence which can happen, and therefore reasons cannot be demanded at the time of investigation.
So can you highlight on any other place?
Yeah, I missed out because of speed. It's good you brought it out. So what they have said is the inspection, search and seizure can happen only at a place of business. Now we have a very interesting case, I think we might have it in a subsequent slide, from the Gujarat High Court in Paresh Nathalai's case, Chauhan's case, where very interesting scenario had happened, and 2-3 concepts get intermingled into that. There was an enforcement action at the place of business of that person, and that person was not there. He was out and he continued to stay out. They went to the place of business, they went to his residence also. And for 15-20 days this continued. They had done whatever they wanted to do. When they were just, the department was just sitting idle for a few days, waiting for that Paresh to come, so that they could record a statement or do whatever they want to do with him. In the meantime, this person approached the court through a writ process, saying that whatever they wanted to do in terms of search, inspection, seizure, they have done. They are just sitting. First thing. Second thing, they have approached our residences, and the section talks about a place of business. So the court says yes, it talks about a place of business, so there is no question of residence being attached or search being done at a residence. So they typically cannot come to the residence. That is one facet. Another facet which comes up is, when I say they cannot come to the residence, please note some small taxpayers might have registered their place of business as residence. If you have registered it as residence, then you are stuck. But if it is not, if it's a normal place of residence where no books of accounts are maintained and it is not registered as a place of business, then definitely they do not have a business to come there. And even in case of attachment, they have talked about personal cash. There is now a Supreme Court decision talking about personal cash not being a subject matter of seizure. So that's where, unlike income tax, where the taxation is on income, which is very widespread, GST is on businesses. Therefore, the focus of their inspection, search and seizure has to be on business and stock in trade. And this is what I think the courts are continuously repeating, as you know, in various types of judgments which are coming up on this matter.
So in our area, it has been frequently done that every search and inspection is followed, is simultaneously done at the place of residence also.
So that is incorrect. That is clearly incorrect, and if you have the courage, you should object to that.
No, they are using this place as any other place. Like
Any other place where records are kept. It cannot be any other place in general. So I think we have a slide which we can discuss. So yeah, so here we will see. Place of business is defined. So it says, may authorize in writing to inspect any place of business. Okay, and place of business is defined. So this does not include residence. That is the first point which we need to bear in mind. And thereafter they have said, or the persons engaged in the business of transporting goods, or the owner or operator of warehouse or godown or any other place. So this any other place towards the end. Am I audible?
yes, yes.
Any other place towards the end is linking itself with a transporter or a warehouse keeper. It does not link itself with a normal taxpayer. So it could be a scenario that there is a warehouse keeper, he is storing goods not in a godown as nomenclated, but in any other place. Now then there is an authority, because there is a suspected counterfeit goods at that place, and therefore they get an authorization through that any other place. Not the residence. If you are keeping stock at residence, if you are keeping books at residence, clearly there is a problem. But if there is no stock at residence, there is no books at residence, then they cannot enter your house. That I think is very clear, and the Gujarat High Court decision which we will talk about also touches upon this aspect.
Can you give the citation of that?
Yeah, it's coming in the next term. So this is an important facet, and therefore, as far as search seizure is concerned, inspection search seizure, if you have to raise a technical objection, you have to immediately move to the courts and get relief. You cannot wait, ठीक है, उसको करने दो. After some time, when the show cause comes, I will raise this as a technical objection. Because courts have consistently said that even if the search is illegal, if there is some material collected during the search, that material can be used against you. So that is a difficulty which one has. Therefore, it's a very tightrope walk which you will have to deal with. So that is section 67.1. 67.2 then talks about searching of goods and seizing of those goods, documents, books or things. Understand this difference. 67.1 talks about inspection of premises. It's a lower type of a thing. As compared to that, section 67.2 talks about searching for things: goods, documents, books or things. And then if required, seizing them. Now, when the matter comes up, I think this is the format of INS 1, which they are expected to show, and you are entitled to see before you allow them entry. It's important to see what is the authorization. The commissioner, joint commissioner, may give an authorization, a limited authorization only for an inspection, or he may give a detailed authorization for inspection, search and seizure. And that's mentioned in this format. For small font you will not be able to see, but I think in the paper book we have given it to you. So check what is the authorization, because if the authorization is for inspection, the field level officer cannot then ask you about various different types. He cannot go around searching things and asking a number of different questions. He's just expected to go and check whether, okay, you have registered this place of business, whether that place of business exists, whether there is enough space, there are enough people there, whether it's an operational unit or it's a bogus unit. That is what primarily the objective of 67.1 is. 67.2 authorization takes them to this process of going into the other facets of goods, documents, books or things. Only then they can go into that process. Of course, you could be first served with INS 1, and if they find there is a reason, the officer can obtain a second authorization to convert that INS 1 into a search and seizure. That is also possible. Inspection can get upgraded to search and seizure, but until that happens, there are limited powers available to you. And this word things, and this again touches back to that point, and now the citations start coming, is the word cash, whether cash is things. So we had one High Court decision which was against, which said that ideally cash may not be said to be things, but this interpreted cash, including personal cash, to be wide enough. The Madras High Court, MP High Court interpreted it very widely and said that cash also can be seized. But recently we have a Kerala High Court decision which was in favor and which went to Supreme Court, and Supreme Court has agreed with the Kerala High Court version, and the Supreme Court also says the same thing. It says that look, personal cash, personal assets have no relevance to the GST investigation. So when we read the word goods, documents, things, they have to be relevant for my GST evasion, relevant to my GST activity. If it is something which is not related to my GST thing, you cannot confuse yourself as a GST officer with being equivalent to an income tax officer. Income tax is much wider, and these are the words used in the High Court decision. One can look at it, and then it says therefore the cash cannot be seized and has to be released. So that is, I think, an important, you can note this citation, Shabu George, important case on that. So this is what is meant by the word secreted. Now again, this is, sometimes what happens is we are seeing cases where they would come in the middle of the month and they will say, okay, ye mahine ka tax nahi bhara hai. Now, if you have raised invoices in a normal fashion for that month, and the opportunity to disclose those invoices to GST or one has not exhausted, you cannot say it is secreted. Secreted means there was an obligation to disclose, but you have not disclosed. So that is what these judgments try to bring about, that what is meant by this overall phrase called secreted. All of this somewhere going to a similar zone. So this is that decision, Paresh Nathalal Chauhan, which talks about so many things. It, as I said, it firstly talks about the place of residence not being touched upon. Second thing, it says that seizure, search and seizure, this section, it's important to read. What it permits to search and seize is only goods, documents, books or things. It doesn't talk about the word person. So, those guys who were sitting for 15 days for that Mr. Paresh Nathalal Chauhan to come. But he's a person, his goods were there. You see the goods, if you require, you seize them. But you cannot insist on Paresh Nathalal Chauhan and search him or seize him, or in that sense keep him in some detention through this type of a process, and you can't stay there till the time he doesn't come. And in fact they've said that no summons were issued. So typically in a search, if a person's statement has to be recorded, a summons has to be issued, a section 70 summons has to be issued. Nowadays, of course, in many cases they are now active, they do understand these challenges, legal challenges, and therefore they issue a summons and then they record a statement. Because through a summons you can enforce the physical presence of a person, not through the INS one. So that is what this Paresh Nathalal Chauhan also brings about. So these are board instructions on search and survey and inspection. Lots of things said, most of it not followed. They would say that it will start after sunrise, end before sunset. All those things are there, but many a times, many of these things we are seeing practically is not happening. An important thing which I think we need to discuss is this instruction 1, the second bullet point here. And this is what is happening. There's a background to this. I have celebrated case of Swiggy. We are aware of Swiggy, the e-commerce portal. There was an enforcement happening, and at midnight, through a force, they were told that you deposit some money because there are targets, and we all understand this targets story and all. So these guys had to, though they were doing everything correctly, they deposited a huge sum under protest. And only reason was they wanted these guys to go away. So they made a huge deposit and the department went away. The few days later, they filed a writ in the High Court saying that this amount is forcibly collected from us and we want a refund. And the High Court obliged and they said, yes, these are coercive payments, even though the DRC3 through which the payment is made has a title voluntary. We did not see anything voluntary in this. In fact, one of the Gujarat High Court decisions also says that during the process of inspection, search, seizure, there should not be any payment. You don't allow him to make a payment only. Even if he wants to make, the payment can be made after the department leaves. But typically because of targets, department wants payment and then it wants to leave. So it's, a situation they'll not leave till you make a payment and you want them to go. So it becomes a catch-22 situation, and high courts came, 2 or 3 high courts came very heavily on the CBSE, saying that this is all tax terrorism, nothing beyond it. And therefore this instruction 1 of 22-23 was issued. Now understand this, it's an interesting instruction. It says, in the context of payment while search or seizure is happening, therefore it is clarified that there may not be, interestingly, may not be any circumstance necessitating recovery of tax dues during the course of search or inspection or investigation proceedings. Very bold statement. There may not be any case of recovery at the time of search or seizure proceedings. But CBSE doesn't stop there. Next bullet point is equally important. However, there is no bar on the taxpayers for voluntarily making the payments on the basis of ascertainment of their own liability of non-payment at any stage. So, however word makes this entire instruction meaningless, according to me. Because they are saying that yes, if CBSE really was bold enough, they should have just stopped at the first bullet point. But they are saying, however, if you want to make, you make. The department will tell you. Anyways, everything is oral. You are all aware how enforcement works. There is no formal communication except the INS-1 or that document which has to be issued to you, summons which has to be issued to you. They don't build up a case, they don't tell you any amounts. Everything is either in an Excel sheet or on a piece of paper without any formal communication. So they will not tell you formally. They say, okay, हम बैठे हैं. हमको जाना है तो आप पे करो, हमारा टारगेट मीट होगा तो जाएंगे, वरना बैठे हैं हम, हाँ और देखेंगे और दूसरा डॉक्यूमेंट मांगेंगे, तीसरा डॉक्यूमेंट मांगेंगे. So that is what results in difficulties here. So these are the High Court decisions which talk about it. Now, having understood that yes, there is a circular which says that there may not be a legal requirement to make a payment, but you are permitted to make. As consultants, we understand that permitted to make is actually forced to make. Assuming you are stuck with a situation of forced payment to be made, the question is how are you going to make the payment? And typically, again, this is not something which many a times you will have a choice, but assuming you do have a choice, then the question is how are you going to make a payment? Will you make it through DRC3 or will you make it through a GSTR 3B? Now this becomes important, especially in cases where there is an interpretation issue of classification. Let us say you have discharged tax at 5%. Department says you pay 18, otherwise I will not go. Now you want to pay 13 and maybe it's a B2B transaction, so you want your customer to take a credit. If he wants to take a credit, DRC3 will not work. It will have to come through a debit note in GSTR 1 and 3B. And therefore you will have to talk to the officers that look, these are interpretation issues. Please wait for some time. I will do a debit note. If you want, I'll keep it in my electronic cash ledger. But I will offset through GSTR 3B and I will not pay through a DRC3. I know it's going to be a fight, but this is one strategy which you will have to bear in mind. Otherwise, you will pay. Client will not get a, customer will not get a credit, and for all you know, if the customer is also a trader, he might also at a future point of time get a similar notice because it's the same goods which he is trading. So therefore, you have to be conscious of what is through, how do you want to make a payment? Will it be through a DRC3 firstly, or will you wait till for an offset in GSTR 3B? That is the first point which you need to take care of. Second is, even if you are making through DRC3, it has a drop down which says whether it's a payment under 73 or 74. Again, 74 is a situation where there is a fraud or a suppression, and therefore there is no need for you to admit a fraud or a suppression. So you should use all your endeavor to make sure that the payment is made under 73 and not through 74. Again, cash ledger, credit ledger, luckily the CBC has later on clarified. Earlier there was a lot of debate on this. Now they have said that any dues can be paid from the credit ledger unless it's an RCM liability. If it's an RCM liability, you can't pay through the credit ledger. And subsequent refund, if you have paid under protest, then based on the show cause notice, you can claim a subsequent refund. Summons, I think we'll skip this. This also we'll skip. I'll quickly take 5 minutes on adjudication and appellate procedures, and then maybe we can quickly wind up. The fundamentals of all these things which we talked about till now will result ideally in an issue. Especially if you are paying, either not paying a tax or if you are paying a tax under protest. The attempt of the department at this juncture is typically to force you to pay up. Even though they cannot officially force you, they will try all their pressure tactics to force you to pay up. And they will force you to pay up not only tax but interest, and at times they will also talk about a 15% penalty. And if you do that, then we need to bear in mind that that's a closure of the issue for you. Then there's no need for the officer to issue a show cause notice. And if he does not issue a show cause notice, whatever you have paid is lost forever. If you want to have a possibility of a refund, especially in cases which are debatable or issues where you want to rely on other decisions and all those things, then you need to make sure that you make a payment under protest. Again, only making a payment under protest may not be helpful, because post the making of payment under protest, the officer will say, if you have made all these 3 payments, I don't want to do anything. He will not issue a show cause. Then within a time frame of 2 years, you will have to file a refund application for the taxes which have been paid under protest, and thereafter take it in the normal course of a refund adjudication. Refund will get rejected, and then you appeal against it, and then you keep your case alive for getting the refund back. So this is one thing which we need to bear in mind, and therefore show cause notice becomes a very important parameter. Show cause notice 73-74 can be issued for different things: tax not paid, underpaid, ITC wrongly availed, or tax wrongly refunded. So these are the 3 broad reasons based on which a show cause notice can be issued. Under 73, which will be issued if there is no fraud, suppression, etc. 74 is attracted when there is a fraud, willful misstatement, or suppression of facts, which itself is defined. That if there was some obligation on you to show it in a return or something, and you have not shown, or you have not responded to the officer when asked for, then it will be treated as a suppression, otherwise it is not a suppression. Now, the difference between these two is, of course, the timelines and also the quantum of penalties. So in 73, the timeline for issue is generally 3 months prior to order in original, and the order has to be issued within 3 years. Of course, for earlier years, because of the pandemic and the various reasons, the dates have been extended. So if you really look at it, you will find that for the 17-18 period, the normal period of limitation gets over for issuance of show cause on 30th September, and therefore many notices have come, and also 17-18 matters which are at the ASMT 10 or DRC 1A stage, the officers are not happy to give you adjournments. Even if you want extensions or adjournments, they are not happy to give you, because they have to issue the show cause before 30th September 23. And the order will have to be passed before 31st December. So the first set of orders will come out in this period, and thereafter these dates have been extended through this notification. Thereafter the original dates will come into place. If there is a fraud or a suppression, then naturally they have a 5-year period, which is much longer than this. Process, we are aware, 1A, then 1, then there is a reply. This is a reply where each and every comprehensive ground has to be taken. Up to this stage, stick on the facts, build up good facts. From here, of course, facts would be important, but from here, full force bring out the entire legal propositions, including technical points, including points on merits. All of them will be a part of this entire process. And this is a chart for penalties. We are aware that if it's under 74, 15% is the minimum penalty, and there are hard-coded penalties which will go all the way up to 100%, depending on the stage where you exit. As far as 73 is concerned, up to show cause and 30 days thereafter, there is no penalty. Thereafter, then there is a 10% penalty or 10,000, whichever is higher. So that is a provision which we need to bear in mind. Appeals, first appeal to be filed within 3 months. 1 month is the period of condonation of delay. Just last week, of course, it's an old decision of Singh Enterprises, but last week it has been reiterated by the Supreme Court to say that beyond the period of 1 month, the delay cannot be condoned by the commissioner, and therefore it's a dead matter thereafter. So 3 months is the original period, 1 month is a condonable period. If 4 months have lapsed, nothing can be done. The commissioner has no discretion to condone a period beyond 1 month, and no other courts can interfere into it. That is what the recent Supreme Court decision also reiterates. Singh Enterprises' old decision was already there on that point, and the recent decision also reiterates that point. So, and pre-deposit is full amount of admitted tax and 10% of disputed amounts. Next is tribunal. Tribunal, I can't speak a lot. The fact is that the tribunal is still not set up. But yes, as and when it gets set up, from the date of setting up, we have a 3-month timeline from that period to file an appeal before the tribunal. These are some commonplace issues which keep on coming, and I think maybe if I can just take one of them and look at how to deal with that, especially at a show cause and beyond stage. So we are all aware about 2A, 3B mismatch as a commonplace issue, and I am seeing n number of different ways in which this is being approached. So I think there are 2 or 3 baskets which we need to bear in mind. When you are looking at and I am talking about a full-blown reply at the show cause level, I am not talking about pre-adjudication ASMD 10 response, where some of this will be more emphasized, some will be less emphasized. But if you are drafting a reply to a show cause or filing an appeal on this issue, I think there are 3 broad buckets in which you will look at the entire matter. First is the facts. And in facts, I think one thing which is very important is to have a proper reconciliation. Now, reconciliation, there are multiple approaches in which reconciliation is done. People pick up 2A, compare it with 3B. Because there is always a cutoff because of the year ending. So there is a 6-month period next year where you could have claimed a credit, so you have to adjust date and all those things. I would believe that your action should start from 3B and move towards 2A. So start with ITC claimed as per ITC register and matching with my 3B. Then some credit in this 3B is relating to a previous period which is reflecting in my 2A of the previous period. So please put that supporting. Some of this 3B credit is actually reflecting in the vendor's 2A of the next year. So bring that out. Some credit has been subsequently reversed. So bring that out. And then accordingly arrive from 3B at a figure which should be compared with 2A. And that 2A figure, what is the correct figure and what is the mismatch. If there is really a mismatch, what are the transactions for the mismatch? Wherever available, take the benefit of the CBC circular which says that obtain the vendor certificates or the confirmations or the CA confirmations. So all of that will help you in substantially reducing the gap and have that preparation ready. Thereafter, of course, your arguments on merits will come, where you will basically bring out the conditions of section 16, show that all of them are satisfied. Then you will go to the favorable court rulings saying that you have to first exhaust remedy at the supplier's end before coming to the recipient's end. And all those things will come in. Then rule 36(4) not being there, matching not being there. All those arguments will be arguments on merits. And final section is also technical grounds. Today, in many cases, there is no clarity about who the proper officer is who is authorized to issue a notice. Is the notice served on the common portal? Because there is a manner in which the notice will have to be served. Is it served in that manner? So whether there is a jurisdiction, if it's a central document, whether it has a DIN number attached to it. So all those arguments can be a part of your technical argument. So typically you can look at your response divided into 3 broad baskets after bringing out the facts and the chronology. On merits and the grounds, it can be on these 3 broad grounds which you can build up. And I think something similar can be worked for each of the issues which you might be facing on a day-to-day basis. So this is what I had from my side. Thank you very much for a very patient hearing. Depending on time, we can take up a couple of 1 or 2 questions. You just Google it out, you'll get it. It's an old decision in excise which talks about the essential ingredients of the valid show cause notice. I am very bad at remembering numbers and citations. So if you just Google out, you'll find it out. It's a very celebrated decision from the Supreme Court.
Sir, what's your view on multiple ASMT 10 under section 61 for a particular year?
Yeah, a very important question. Whether multiple ASMT 10s can be issued for the same financial year?
Yeah.
In my view, no. Because if the officer is scrutinizing a return, he has expected to comprehensively scrutinize the return at that moment itself.
Okay.
So you cannot have two ASMT 10s for the same financial year.
This has been a common.
DRC 1A can be 2,
DRC 1A can be.
but ASMT 10 cannot be 2.
And after proceedings under 65 also they are issuing ASMT 10 under section 61.
So this is again a lot of, see, basically there are different departments and ideally everyone should respect the objective of that process and the department. So if you've seen what I tried to present, there is something called scrutiny, which is a back desk job.
Correct.
Then there is an audit, which is financials versus returns. And then there is an enforcement summons, etc., which is it's their investigative agencies to find out things which cannot be trapped in these two.
Correct.
So each of them has a different objective, different scope area. But we are seeing lots of trespassing. We are seeing cases where an investigating authority will ask you for a 2A 3B reconciliation.
Correct.
According to me, that is never their scope. They should leave it to the audit teams to do it. It is an audit team scope, neither a scrutiny scope nor an investigating authority scope. Investigating authority is expected to find out unaccounted sales, fake invoices, or fundamental issues of interpretation of classification, or wrong exemptions claimed based on wrong documentation. Let's say we are doing a point 1 and then somebody has put a wrong bill of lading. That is the type of activity which the investigating authority is expected to, not expected to do a reconciliation between 1 and 3B or 2A and 3B. That is, the audit team is expected to do that.
What is happening normally is that after completion of audit, if some ground is not covered under audit, like it is accepted by the audit team, so they won't raise that point in that audit report. So they are coming up with ASMT 10 later that this ground has not been covered by the audit team. How it is possible?
No, that is not possible. That's clearly incorrect. So what I was trying to answer your question, moment an audit is done, audit within it encompasses scrutiny. So once an audit is done, ASMT 10 cannot happen.
And sir, you told about under protest. There is no mechanism as such of being under protest.
So it's implied. See, even if there is no mechanism, two things. One is you can't pay under protest in abstract. So today, there is this safari retreats happening. So you say, I want to reverse credit under protest without any action on me. That is not correct. But if the department comes to you, it brings out a point, maybe not through a formal show cause notice, but there is some documentation to say that, look, the department came to me, he is saying me this, I don't believe in it, but I have to avoid interest and also to cooperate in the process and show my gesture, I am ready to reverse under protest. That type of a communication is perfectly valid and it is within your rights to do that. And even courts have held that that is possible.
So secondly, sorry, I am exceeding too many questions. 125 penalty notices are commonly issued in our area for delay in filing of 3B. So they want to, other than interest and late fee, they are invoking 125 to demand 25,000 of penalty. So isn't it
that again is a very incorrect and a myopic way of looking at it, I would believe. When a specific late fee is imposed for a particular act, you cannot impose a secondary penalty on that same thing.
But
so naturally that notice will have to go at some point.
On ground, realities are getting very out of hand, sir.
That's where I actually want to end with that question which I started with.
Yeah, raising of hand.
Is it a good and simple tax or is it a Gabbar Singh tax? How many say it's a good and simple tax? Gabbar Singh tax? So all of us are patriots of Rahul Gandhi. And I can tell you, the reason why we are saying it's a Gabbar Singh tax is because of today's presentation. If I was given a topic of input tax credit or tax, output tax or anything like that, law related topic, perhaps if you compare that discussion today with my 7 years old discussion, you would say it's a good and a simple tax. So, to summarize the entire thing, I think we are a bit behind schedule. We can take questions offline later. To summarize this entire thing, my perception is this is a good tax implemented badly.
So sorry, sir, I will take time, please. There is a
I have no problem there. Do we have time? Okay.
Umesh sir, please. Okay. There is a case for 3B2A with a service provider. I am a service provider. I have not updated my GSTR1, not paid the taxes, but the recipient has deducted my tax, TDS. 26 years में मेरे वो इनकम दिख रही है. मैंने टैक्स नहीं भरा.
फाइलर का केस है आपका?
हाँ, मैं नॉन फाइलर हूँ. नॉन फाइलर
मैच हुआ लेकिन नॉन फाइलर.
3B नॉन फाइलर भी नहीं हूँ, नील फाइलर हूँ. नील फाइलर हूँ.
नील फाइलर है. 3B फाइल हुआ है.
3B फाइल्ड हुआ है, नील से फाइल्ड हुआ है. मेरा कंसेप्ट ये है कि मेरे जिसको मैंने सर्विस दिया था उसको 3B2A का नोटिस आया, उसने पे भी कर दिया. उसने पे भी कर दिया विद इंटरेस्ट. डिपार्टमेंट हैज गेट द रिकवरी डन फ्रॉम हिम.
यू आर द सप्लायर.
यस, आई एम द सप्लायर.
ओके.
जिसको मैंने दिया था, जिसको मैंने सर्विस दिया था, उसको नोटिस आया 3B2A का, उसने टैक्स पे भी कर दिया इंटरेस्ट के साथ में. 2 साल बाद मुझे नोटिस आ रहा है बेस्ड ऑन 26 AS.
They can issue it.
Now what is the remedy to me?
There is no remedy to you because you are the culprit.
Is it not looks to be a double taxation?
That doesn't matter, but you are the culprit of double taxation. So you should definitely be caught.
Definitely be caught. This is the point. What you are saying ki if later
at
on,
the most, based on your conduct of payment, maybe your recipient can perhaps consider whether he wants to file a refund.
okay.
But you can't be absconding. You can't be saying that okay, उसने भर दिया तो मैं नहीं करूँ.
नहीं, just I am asking one thing. Same way 3B2A, the dealers, the vendors are deducting the payment from our side that we are paying for you, and later on notice will also come based on our balance sheet that this is your turnover what you have not reported. Now you pay the tax again. One thing, this is one point what I want to understand.
So I think the fundamental principle of law is very clear.
Okay.
The primary responsibility of payment of tax rests on the supplier.
Okay.
At no point of time can a supplier wash his hands away from payment of that tax.
So even
irrespective of whether the recipient has reversed the credit, whether he is forced to reverse the credit, whether he has paid, whether he has, what is happening at his end is irrelevant.
Okay. Second point, Rule 88B, introduced 5th July 2022, Notification 14, retrospectively with effect from 1/7/17. So that does not mean कि late filing is better than something wrong filing.
So those types of situations do come in because
that we are liable to pay interest on gross amount. Even if we have a ITC balance, मेरे पास 5 रुपए देना था, 4 रुपए मेरे पास पड़ा था, फिर भी मुझे ब्याज पूरे पे लग रही है.
So that's a challenge which does come in. Those who are late will take the benefit. Those who have already paid is gone.
We should fight now that this how these provisions are retrospectively effective after implementation of 5-year GST.
So that is what I think even Umesh ji was highlighting.
1/7/22 को लागू हुआ कानून, 5 जुलाई 22 को कानून आ रहा है कि जो हमने आज तक के बोला था कि कैश पे लायबिलिटी लगेगी, इंटरेस्ट लगेगी, हम कैश पे नहीं, हम आपसे ग्रॉस अमाउंट पे इंटरेस्ट लेंगे. सेम ASMT पहले क्लोज हो चुके हैं ईयर्स के, अब वो नए पैरामीटर नंबर 103 बना के अगेन ASMT 10 जनरेट कर रहे हैं, जिसका हम ऑलरेडी एक बार ASMT क्लोज कर चुके हैं. पैरा 73 3B2A का हमारा वो ईयर का असेसमेंट क्लोज हो चुका है. अब उसी ईयर के लिए नया पैरामीटर, ये पैरामीटर लाके कि आपको ग्रॉस पे लायबिलिटी पे लगेगी.
No, so you can definitely question the reassessment, which I think we already answered. Once an ASMT 10 is issued, you can't issue it again.
What is this update on, sir? One more, GST tribunal, because it's a different thing. There's a different views of central and state.
So
on the same point, central is imposing 100% penalty 74. On the same point, state is imposing 10%. And last, you answered later on that thing. There is a what will be your views on penalty if only interest is due?
The tax was paid delayed.
Yes, no, tax is paid now. I got the notice DRC 01, मैंने टैक्स को पे कर दिया, सिर्फ इंटरेस्ट के लिए मैं लड़ रहा हूँ.
Okay.
अब मुझे पेनल्टी कितनी लगेगी?
Okay, so you have paid the tax after the show cause or before the show cause?
Let it be before the show cause.
If you have paid before the show cause and there is no fraud,
Yeah.
the question of any penalty does not arise.
Here is some interpretation with the State Department is going on.
Because they are saying the section uses the word tax and interest both.
Yeah. Yeah,
Yes,
I will
that's
connect
all.
it to you later on.
Thank you. Yes, he has to issue a FAR. No, he has to issue a clean FAR. Yes, he has to issue a FAR to complete. ठीक है, तो he can say that I am happy and he still has to put some basic parameters in that and then he has to say there are no issues identified. ₹100 का RCM का पैरा बनवा दो, भर दो, खत्म करो. Thank you.
Thank you, sir. Nice session.
Thank you, sir. GST litigations can be intricate and challenging, but with the right approach and insights from experts like you, sir, businesses and professionals like us can navigate these challenges successfully. I want to express my sincere gratitude to sir for their informative speech on GST litigations. Your willingness to share your expertise and experience has been enlightening and we are grateful for the insights you have provided.
The participant of the member when the lucky draw is announced.
I repeat, attendance in the hall is mandatory when the name is announced to claim your prizes.
The food coupon, lucky draw coupon and CPR's coupon have been kept in the kits. Please check the same. This lucky draw box has been kept outside near the stalls and the CP box is at the registration counter.
Being thankful to someone shows that you respect their presence and also the time they shared for you. And the best possible way of letting that thing be known is through a token of remembrance. I now request CA Deepak Agrawal sir to present our honorable speaker with a token of appreciation.
We further request C. PC Agrawal sir to present a memento to Central Council member C. Umesh Sharma sir. I also request C. Ramesh Baheti sir to present a token of remembrance to Regional Council member C. Pinky Kedia ma'am. Thank you, sir. As it said, recognition is the greatest motivator. We would like to acknowledge the crucial efforts done by our press and publication team. Their commitment to capturing key moments, promoting the event to a wider audience, has spread the conference's impact beyond the venue. With an applause, I request Press and Publication Committee of Akola and Amravati Branch to come up on the dais. I request C. Sunil Gabhawalla sir to present a token of appreciation. Press and Publication Committee of Akola and Amravati Branch.
साइड की ना साइड से लो साइड से
Feeling gratitude and not expressing it is like wrapping a present and not giving it. Hence, I now request.
We kindly request all the members to visit the stalls for invaluable insights and networking opportunities. We request C. Pinky Kedia ma'am to please give the vote of thanks to conclude the session.
Thank you. Just I want to thank Sunil Gabhawalla sir to take a complex subject, litigation in GST. Like he said that गब्बर सिंह टैक्स और गुड एंड सर्विस टैक्स. तो आप लोग ये इनके स्पीच से समझ में आ रहा है, अपने अपने एक्सपीरियंस से समझ सकते हैं लोग कि वो गब्बर सिंह टैक्स है कि गुड्स एंड सर्विस टैक्स है. ओह ये भी सही है, गाभा वाला सुनील टैक्स, ये एक नया मिला. तो इट्स अ वेरी ग्रेट प्लेजर टू हियर हिम. बट मेरे को 2 अनाउंसमेंट करने हैं एज ए विकासा चेयरपर्सन. एक तो हम लोगों ने इंटर के और फाइनल के क्रैश कोर्सेज WIRC पे लगाए हैं, वो 1 सितंबर से स्टार्ट होंगे एंड दैट इज वर्चुअल ऑल्सो. फीस भी बहुत कम है, 4000 है ऑल सब्जेक्ट. तो आपके यहाँ पर अकोला अमरावती में किसी भी बच्चे को, किसी भी स्टूडेंट को करना है यदि वो क्रैश रिविजन कोर्स, तो दे कैन ज्वाइन on WIRC website in Vikasa event registration. They will find the details. तो इंटर के लिए IPCC के लिए भी और फाइनल के लिए भी 1 सितंबर से स्टार्ट होगा, वर्चुअल भी है वो. तो आप अपने यहाँ के स्टूडेंट्स को बोलिए ज़्यादा बेनिफिट लेने के लिए, क्योंकि हमने रिनाउंड फैकल्टीज़ को उसमें बुलाया हुआ बच्चों के लिए. सेकेंड जो चेयरमैन सर ने बताया प्रेरणा, वो हम वुमेन एंड यंग एम्पावरमेंट कमेटी की तरफ से हमने प्रेरणा चेयरमैन के गाइडेंस में स्टार्ट किया है. उसका फर्स्ट प्रोग्राम जो उन्होंने बताया 5 सितंबर को से स्टार्ट होगा. वो कोर्स यदि आप बाहर कहीं भी करोगे तो वो 35,000 प्लस GST लगता है. 36 आवर्स का कोर्स है वो, और हम लोगों ने उनसे काफ़ी डिस्काउंट लिया है सिर्फ CA के लिए, एंड दे एग्रीड टू गिव इन 5,000 प्लस GST. तो आप लोग सबसे रिक्वेस्ट है कि आप लोग उसका बेनिफिट लीजिए, क्योंकि उसका रजिस्ट्रेशन की सीट लिमिटेड है. ओनली 30 रजिस्ट्रेशन होंगे, क्योंकि वो वर्चुअल है और वो वर्कशॉप है. तो एक वर्कशॉप में वो ज़्यादा लोगों को लेना नहीं चाहते, नहीं तो 1-to-1 वो संभाल नहीं पाएंगे. दैट्स वाई दे आर लिमिटेड टू 30. सो इन 5,000 यू आर गेटिंग वर्क, 35,000 वर्क. तो आप लोग ज़रूर से उसको ज्वाइन कीजिए, वो बहुत अच्छा कोर्स है. एंड thank you to Akola and Amravati committee and WIRC to organize this sub-regional conference. And thank you sir to come here and give your guidance on this complex चीज़. And I know thanks to all the participants कि लंच का टाइम ओवर हो गया तो भी बैठे थे, सुन रहे थे. तो आई कैन से दैट इट्स गब्बर सिंह टैक्स, तो डर के मारे भी बैठे थे सब सुनने के लिए कि सर कुछ ना कुछ टिप्स बता दें प्रैक्टिकल, तो वो लिटिगेशन में निकल सके. Thank you sir.
Thank you ma'am. I think major members have gone for sumptuous lunch. Our food partner is MEP Infrastructure Developers.
We will resume our next technical session in 45 minutes.